Welcome to the Deep Dive. We're here to take your sources and, well, pull out the key insights just for you.
That's right.
Today, we're digging into the 2024 Consolidated Annual Accounts and Sustainability Report from a major telco player.
A hefty set of documents.
Indeed. And our goal is to give you a clear picture, their business segments, financials, future plans, all based on what they've reported. We want to get beyond just the surface level stuff.
Exactly. We're looking at performance across the board, checking their financial pulse, profits, cash, debt, and really unpacking their strategy in what's, let's face it, a pretty fast-moving market.
Right. So you walk away really understanding where they stand and maybe where they're headed.
That's the plan.
Okay, let's get into it. Now, the reports mention specific entities like Telefonica, Brazil, Germany, Hispam, VMO2, but maybe not super granular financials for each segment in these specific excerpts.
No, it's consolidated.
Yeah.
But you still get a good feel for the overall strategy.
So what jumps out at you first regarding their growth strategy? What are the big initiatives?
Well, the first thing is the huge emphasis on next-generation networks. They're clearly pouring money into fiber and 5G.
That seems table stakes these days almost.
It is, but look at Telefonica Germany, targeting 97% 5G coverage by end of 2025. That's aggressive.
Yeah, that's aiming high.
It positions them not just for mobile, but maybe even challenging fixed broadband, IoT, all that future stuff. It's a strategic bet on infrastructure being key.
Okay, investing heavily there. But alongside that, I'm seeing a real push for efficiency, for cutting operating costs.
Oh, absolutely. That's the other side of the coin.
Yeah.
They're actively moving from copper to fiber, which is, well, just more efficient long term.
Less maintenance, presumably.
Right. And shutting down legacy systems, sharing network infrastructure where it makes sense, hedging energy costs, even organizational right-sizing.
Standard efficiency playbook, maybe.
Pretty much, yeah. But necessary to shore up the bottom line when you're making those big network investments.
Got it. Now, some big moves mentioned. Telefonica Brazil buying Oi Group's mobile assets. That sounds massive, over €1 billion.
That's a significant play in Brazil. Acquiring those assets instantly boosts their market share, gives them more scale, a bigger customer base. It really strengthens their hand in a key market.
And strategically important for Latin America overall, I imagine.
Definitely. And notice they withheld some payment pending adjustments. That's just prudent risk management on a deal that size.
Makes sense. And then there's movement in Chile, too, investing in fiber assets there.
Yeah, Telefonica Chile investing via Holdco Infraco to get fiber assets from Entel. Again, it's that focus on strengthening high-speed capabilities. Fiber, fiber, fiber.
And sticking with fiber, that joint venture in Germany with Alliance for FTTH fiber to the home.
Right. That's quite interesting. Teaming up with a financial heavyweight like Alliance lets them speed up the fiber rollout without footing the entire bill themselves.
So shared investment, shared risk, faster deployment.
Exactly. Telefonica entities potentially putting in up to 500 million euros, Alliance up to $1 billion. That's serious capital going into German broadband.
It sounds like it. And they're not just stopping at connectivity, are they? Mention of alliances with tech firms for cloud professional services.
Yeah, that's crucial. You can't just be a dumb pipe provider anymore, or it's harder. Businesses want integrated solutions.
So bundling connectivity with cloud, security, data analytics.
Precisely. Partnering with specialists lets them offer that whole package, which can mean stickier customers and, higher value deals.
Okay, so a lot of proactive steps, investments, deals, but it's not all smooth sailing. The reports also flag some pretty significant challenges, like these impairment losses.
Ah, yes. This is where things get a bit more complicated. Those impairments, Peru, Chile, UK and Ireland, Argentina, they add up.
And an impairment is basically writing down the value of an asset.
Essentially, yeah. It's recognizing that the assets carrying value on the books is more than what they realistically expect to recover from it. Maybe because market conditions soured or performance dipped. It's a direct hit to profit.
And they specifically mention an aggressive competitive environment hitting Telefonica del Peru.
Right. So that impairment in Peru seems directly linked to tough market competition. It suggests they're struggling to maintain pricing power or market share there.
A real pressure point.
Seems like it. And these specific market issues are happening against a backdrop of, well, broader economic worries.
Inflation, interest rates, the usual suspects.
Exactly. Higher inflation and rates squeeze household budgets, which could dampen demand for telco services, or at least push people towards cheaper options. It's a headwind for growth generally.
Then there are the global issues, geopolitical tensions, cybersecurity.
Always concerns for a multinational. Cyber threats are just getting more sophisticated, demanding constant vigilance and investment, and geopolitical instability. Well, that just creates uncertainty.
The report also mentions regulatory changes, like market deregulation in Spain. How does that play out?
Regulation is always a big factor. Deregulating the wholesale market in Spain, for example, could mean more competition, potentially pushing down the prices they can charge other operators to use their network. They'd have to adapt.
So more competitive pressure potentially. And ongoing risks around things like international data transfers, the constant cybersecurity battle.
Yeah, those are sort of operational constants now.
Hmm.
Staying compliant with data privacy rules across different countries is complex, and cybersecurity is an arms race you can't afford to lose.
And finally, they flag currency risk, which makes sense given their footprint and bribery corruption risk.
Standard multinational risks, really. Exchange rate swings can make reported earnings jump around quite a bit. A 10% move in Latin American currencies against the US dollar could mean a 42 million euro swing, apparently.
Wow.
And operating globally, especially interacting with governments, just inherently increases exposure to potential corruption. So strong compliance is vital.
Okay, let's shift to the financials, the bottom line. A profit of 209 million euros in 2024. That's way better than the loss in 2023, but still down from 2022.
Right. It's a return to profit, which is positive, but that volatility shows the impact of those impairments we discussed, especially the ones hitting the 2023 numbers hard.
Looking deeper into the income statement, finance costs are pretty hefty, nearly 3 billion euros.
Yeah, that reflects their debt load. It leads to a net financial expense of about 1.8 billion. Profit before tax was 557 million. Then taxes took out another 348 million, bringing them to that 209 million net profit figure.
And earnings per share.
Basic EPS came in at 0.31 euros for 2024.
What were the big drivers behind that swing back to profit in 2024?
Well, the biggest factor was simply not having those massive impairment charges that dragged down 2023.
Right, the absence of a large negative.
Exactly. But there were some positive contributors, too. They got a favorable ruling in that ICSID case against Colombia, about 154 million euros in other financial income.
Though that's still being potentially contested.
Yes, there's an annulment application ongoing, so that's a slight caveat.
Any other sort of one-off items or accounting things?
There was a reversal of a provision in Brazil, Telefonica Brazil, related to a regulatory agreement that added about 70 million euros. And they applied new accounting standards for hyperinflationary economies like Venezuela, but apparently it didn't have a significant impact this time around. Just shows they're keeping up with the rules.
Got it. Briefly on the balance sheet, total assets over 100 billion euros. That gives a sense of scale. And goodwill intangibles around 1.5 billion.
Yeah, the total assets show the size. The goodwill intangibles mostly come from past acquisitions, things like brand value, customer lists. It highlights why those acquisitions need to perform to avoid future impairments on that value.
And cash flow. They mention repatriating funds from Latin America back to Spain.
About 364 million euros in 2024. It suggests cash generated in LATAM is flowing back to the parent company, maybe for debt reduction, investment elsewhere, or shareholder returns.
Speaking of shareholder returns, let's talk value creation plans. A cash dividend confirmed for 2024, 0.3 euros per share.
Yep, paid in 2 chunks. That's a clear, direct return to shareholders. Investors tend to like that consistency.
It signals confidence, doesn't it?
Often, yes. Confidence in future earnings and cash flow.
They also talk about treasury shares holding their own stock. Why do companies do that?
Several reasons. Could be to offset dilution from employee stock plans, maybe have shares ready for acquisitions, or for buybacks.
Buybacks to boost the share price.
Potentially, yes. Reducing the number of outstanding shares can increase earnings per share. They also mentioned canceling some previously bought back shares in 2024, which permanently reduces the share count.
And their long-term incentive plan, the LTIP, hitting its total shareholder return target seems positive.
Very positive. Achieving 33.6% TSR over the 2022-24 cycle put them in the top quartile of their peers, leading to a 100% payout for that part of the plan.
So management incentives aligned with delivering shareholder returns.
That's the idea, yes. It suggests strategies over that period worked well for investors, and management got rewarded for it.
Okay, pulling it all together, looking forward. They rate their 2024 operational performance as good, highlighting growth in high-value accesses. What's your take?
Good operational performance, plus growth in things like fiber and mobile contracts. Usually your better paying customers, suggests the core business has some healthy momentum. That's a decent foundation.
And they stress things like employee well-being, diversity, social dialogue. How important is that stuff, really?
Increasingly vital, I'd say, not just nice to have anymore. Good ESG, environmental, social governance practices build reputation, attract talent, and more investors see it as crucial for long-term sustainable value.
That ties into their sustainability focus, too, right? GHG reduction targets, huge increase in renewable energy use.
Absolutely. 89% renewable energy use in 2024 is quite high.
And linking climate metrics to executive pay really underlines it.
It does. Sustainability isn't just PR, it's becoming core business strategy. It can drive efficiency, cut costs long-term, enhance the brand, and appeal to a growing segment of investors and customers.
But they still acknowledge the need to manage those ongoing challenges, regulation, cybersecurity.
For sure, those aren't going away. Adapting to regulatory shifts and staying ahead of cyber threats will remain critical priorities.
So, summing up, it feels like a company actively investing in growth areas like fiber and 5G, trying hard to be efficient, committed to shareholder returns and sustainability.
But also juggling significant challenges like tough competition in certain markets, those past impairments, and the broader economic climate.
It's a complex picture.
Definitely. They've got positive momentum and clear strategic goals, but executing effectively while navigating those headwinds will be absolutely key going forward.
Well, this deep dive certainly gives us, and hopefully you, a much richer perspective than just scanning the news. It leaves me wondering, though, considering those big tech investments versus the market challenges, what's the most critical factor for their success in the next few years? Or maybe looking longer term, how will that focus on sustainability and maybe even the circular economy really change the whole telecom industry?
Fascinating questions indeed. Lots to think about.
Thanks for sharing your insights today. And to you, our listener, if you've got sources you want us to dive into next time, do send them over.